हेलो एंड वेलकम टू माय टुडेज वीडियो। आज नवरात्रि का आखिरी दिन है और आप सभी को मेरा हार्दिक शुभकामनाएं। तो we are in the result season of Q2FY24 for most of the companies, and all of the IT majors, Infosys, TCS, and Wipro has posted their result. In today's video, I will try to throw some light on the current performance of all these three IT majors and what is the expectation from these companies, or let's say from the entire IT sector going forward. I'm sorry, lots of noise around in this festive season. So I'm trying to do my best so that it must not disturb anyone. So TCS, I will start with TCS. TCS posted the result, like the first one to post the result in Q2 FY24 as an IT company. Uh, in rupee term, TCS posted 8% top line growth. Infosys posted in rupee term again 10% top line growth, or all are year on year basis. And Wipro had almost no change in their top line performance year on year basis. In constant currency terms, revenue grew 2.8% for TCS, 2.5% for Infi, and Wipro posted negative 4.8% top line growth on constant currency basis. Now, very important that what is the guideline? We all know that TCS does not provide any guidance when Infi's guidance is very crucial for us. Infi has given guidance for exit FY24. Like in April, they have given a guidance for their top line as well as operating margin, right? So, constant currency basis, top line growth, year on year basis. What in the April management, Infi management has told 4 to 7% top line growth. In Q1, after Q1 FY24, Infi management told 1 to 3.5% top line growth. The difference we can understand, like how the macroeconomy was getting weaker, and accordingly Infi management posted their skeptical guidance. In Q2, management has further trimmed its top line guidance, rather the upper range of the top line, from 1 to 3.5% to this time 1 to 2.5% for exit FY24. So they have trimmed the upper cap from 3.5% to 2.5%, showing and expected weakness in the sector. Wipro keeps on giving sequential guidance. So what was sequential guidance? Last quarter Q1, they have posted negative 2% to 1% sequential growth guidance on constant currency terms. That means this quarter, in Q1 they said Q2 will be negative 2% to plus 1% growth in the top line on constant currency basis. Actually, sequential basis, Wipro posted negative 2%. So absolutely in line with the management's guidance. In Q2, for Q3 guidance, for the like in constant currency term, that is the revenue guidance, revenue growth guidance rather, that is negative 3.5% to negative 1.5%. H1 was not that bad as everyone is anticipating, but still some weakness was visible. Deal wins were intact, but execution, or let's say translation in the revenue, was not happening. Specifically for companies like Wipro, it was not at all happening. For Wipro is giving Q3 guidance weaker, and Infi is giving exit FY24 weaker. So altogether H2 is likely to be weaker. Operating margin, TCS posted 24.3% operating margin versus 24% in Q2 FY23. Q2 FY23. So there was 300 basis point improvement in the operating margin for TCS on year basis. Infi 21.2% operating margin versus 21.5% last year same quarter, means 300 basis point dip in the operating margin. Now very important is the vertical wise performance. Vertical wise, if we see the banking and financial services including insurance sector, BFSI sector, in rupee term TCS posted 8% growth. Okay, TCS growth was not that bad. Rather, they have posted some steady growth. But for Infi, on constant currency basis, BFSI segment remained a point of concern. Negative 7.3%. That means 7.3% degrowth in constant currency terms for Infi. Like Wipro posted negative 9.5% constant currency growth from BFSI segment, negative 9.5%. So BFSI segment has been doing not doing good rather. So 7.3% degrowth in constant currency terms for Infi and 9.5% degrowth by Wipro. Manufacturing did well for Infi as well as for TCS. TCS posted 12% growth in the manufacturing when constant currency terms. Manufacturing segment performed 12.6% for India. Communication, important vertical specifically for Infosys, posted negative 4.3% growth when TCS in rupee term, TCS posted 2% growth in communication, media and technology together. And for Wipro, it was negative 14.6%, hefty degrowth in this particular segment on year basis in constant currency terms. Life sciences vertical in rupee term for TCS grew 10%. In constant currency terms, life sciences vertical grew 18.4% for Infi. Like very strong sector, or let's say showing very strong outlook in the US healthcare market, life sciences and healthcare market. And Wipro also posted good numbers, 7% constant currency growth in the segment called healthcare. For them, it is healthcare, right? So, overall, segment wise performance is mixed. Larger segment shown specifically BFSI and obviously communication also performed quite not satisfactorily, so there was a significant degrowth for all the companies. Or let's say TCS posted growth, but growth numbers were skeptical, were less than significantly less. Now, if we consider contribution, TCS contributes 30, like BFSI contributes around 38% for TCS, for 27.5% for Infi, and 34% for Wipro. So, this segment, weaker performance of the segment obviously is a concern in terms of the performance of the company. Retail is big for TCS. Retail and consumer goods together contributes around 16% to the top line of TCS. Infi retail contributes around 15%, very significant. Manufacturing, TCS contribution from manufacturing is 10%. For Infi, it is 14.3%. For Wipro, it is 7%. Communication vertical is not that significant. Communication, media and technology together contributes around 2% to the top line of TCS, 4% for Wipro, but Infi it is very crucial, 11.4% contribution from the communication vertical. Energy is again important for Infi, almost 13% contribution comes from this particular segment when energy, natural resources and utilities together contributes around 13% for Wipro. Life sciences vertical, robust performer across the board. Life sciences segment contributes 10% for TCS, almost 8% for Infi, and 12% for Wipro. And consumer division is very important for Wipro, contributes around 19%, where for TCS consumer division is inbuilt with the retail segment, contributes around 16%. So this was the overall performance comparison for three IT majors. Now, very important, we will discuss little bit on the pointers like which I have extracted from the management calls, like all of the three management calls I attended. So, what the management said for TCS, let's look at this first. In Q2 FY24, TCS achieved a contract of deploying modern 4G and 5G communication infrastructure in Pan India for BSNL, Bharat Sanchar Nigam Limited, with a sizable portion of the revenue expected to be translated by in the next 12 to 18 months. Very important, and this deal value is USD 1 billion for BSNL. Uh, TCS also won an important deal for Jaguar Land Rover. This is also USD 1 billion. Strong demand, particularly from cloud and optimization. The company expects huge opportunity in Gen AI segment, and TCS has over 250 Gen AI opportunities in the pipeline across industries. And this what TCS said, like they have almost 1 lakh Gen AI ready employees with them at this point of time. So this was the key pointers from TCS. Now I will discuss a little bit on Infosys. So very important is that TCS Infosys was deferring their annual hike for past few quarters, right? So their usual timing of package hike, annual package hike for their employees, except management, is April, the month of April. Now, if we consider the top level management, then it is the month of July. But this time they have deferred for 2 quarters, and now Infi has declared that this hike, salary hike or wage hike, whatever, so that is going to be means effective from November 2023. So next month this rollover will happen, and obviously it may have some impact on the margin, but yes, I will discuss those things, that they have taken many significant measure to defend any deterioration in the margin. Okay, so in the retail industry for Infi, there is a rise in cost efficiency led deals and vendor consolidation deals. Further digital transformation using AI is observing renewed demands. Communication vertical continues to see weakness. Manufacturing is witnessing healthy demand. Utility in North America is under pressure while European utility is doing good. In retail, as I said, like client budget remained tight, and Infi also said increasing interest for Gen AI specifically from retail segment. Manufacturing continues to do well with vendor consolidation, which I already have mentioned. So this was important takeaway from uh, Infosys management's call. And Wipro, I'm just trying to highlight only key pointers, otherwise it will be very large, very big. So, why very important? Like, will special touch to Wipro? Why Wipro's numbers are like weakest? Looks weakest among these three uh, IT majors, because this underperformance is attributed to high exposure to consulting business, which contributes around 15, 16, or maybe little more than that in their IT services segment. So this segment was weak, and it impacted the performance, top line performance of the company. Next, point is the BFSI segment. As across the companies, across the board, we have seen weakness in the BFSI segment. For Wipro, contribution of BFSI segment is 34%, significant, very very significant, and that's why weakness in the BFSI segment impacts the top line performance of Wipro. Companies inability to translate their order book, because deal wins were absolutely fine, but they could not translate it in the revenue up to the mark, and that also had some impact. So altogether, like, high exposure in consulting, BFSI, non-performance of BFSI, and lack of translation into revenue, lack of orders translating into revenue, altogether impacted Wipro's top line performance. Wipro won 14 large deals with total contract value more than USD 30 million. Deal win rate in Europe has improved. That is a good sign. Now, let me tell you in this regard that Wipro reports geography wise two Americas, Americas 1, Americas 2, and Europe. Now, how they distribute their performance, like their segments or verticals, that is, America 1 consists of America, just a moment. America's one includes healthcare, medical devices, consumer goods, life sciences, retail, transportation and services, communication, media and transformation services, technology, products and platforms, all together in US and in Latin America comes under America 1. In America 2, banking and financial services, that is BFSI segment, manufacturing, high tech, energy and utilities industry in US and Canada comes in Americas too. So their division is bit different than rest of the peers, and that's why, like, as America 2 consists of BFSI segment, and that's why this quarter America 2 had some like degrowth in the revenue, rather say some drag down for from this particular America 2's geography. Now, what the management is doing, very important. Obviously, like, Wipro has witnessed this degrowth in the top line, non-performance, degrowth, altogether Wipro is under pressure. Now, what management is doing, management is focusing on high quality businesses where they will get better margins, and they are moving away from the loss making accounts. uh, they are focusing on into the utilization, improvement in employee utilization. They are focusing on winning large deals and a reduction in the subcontracting cost, which is fact for all like IT majors. They are also focusing into the offshore mix, and as I mentioned, utilization is very important for them. Now, one another very important pointers. I don't know what would be the impact on these IT majors. It's too early to try to conclude something at this point of time. That already Basel 3, we are able to listen to Basel 3. Basel 3 endgame. What is this? Basically, this is a proposal for by US Fed for the US banks to give a robust infrastructure for the banking sector, right? So US banks aim to improve their resilience against potential future financial crisis by implementing stricter capital and liquidity requirement. These proposals outlined by the Federal Reserve includes increasing the minimum capital requirement for US banks, enhancing risk management services, improving their ability to withstand stresses in the economy. US regulator has proposed July 25 means July 2025 for compliance with the new requirements with a multi-year translation period. I really don't know exactly what would be the impact. This question was asked to Wipro management. Wipro management didn't focus, or let's say didn't answer this question directly. Only thing they mentioned, like uh, any improvement in the sector is like an opportunity for them, but I think there may be some constraint at this point of time. What I get to understand, like there will be, like, as Federal Reserve is asking to you increase minimum capital requirement for US banks, so it may impact liquidity of the banks. So discretionary spending from the BFSI segment may be impacted up to a certain extent, but degree of impact is something which I don't understand today. So maybe it will be clear going forward, but at this point of time it seems some constraint, some liquidity constraint or discretionary spend may be impacted going forward. But yes, companies are taking enough measure to fight with the margin problem, but discretionary spending uh, may be impacted. That one thing we need to take care of. TCS said that they have added one new account more than 100 million USD, 100 million plus in this quarter, which increased their total counts to 22. They are focusing on capturing the digitizing market and improving the quality of revenue. So this was what Wipro said. Like these are the key pointers of from the Wipro con call. So altogether, it seems that FY24 is likely to be gloomy, and like companies are taking enough measure to keep the margin intact. This is their own very important focus for all the companies, what I found. Like by taking several cost cutting measure, uh, they will be able to, like they are trying to maintain the margin, like what in fees guideline was there for the operating margin. In April quarter they said 20 to 22% operating margin. In Q1 same they maintained 20 to 22% operating margin, and in after Q2 also they maintained 20 to 22% operating margin going forward for exit FY24. So very important that margin expectation, there is no problem in terms of expectation of margin is likely to be intact. But what may be impacted, that is the top line performance in terms of the growth, due to several reasons which I have discussed. Margin may be manageable for all the companies because they are taking ample measure to manage the margin. So altogether, like opportunity, size is big. In the short term, maybe initially we were anticipating H1, now we are anticipating H2 is also likely to be weak exit, but from FY25 things will be normalized. That is the anticipation at this point of time. And so altogether, obviously, like as there are certain pressure on the sector, that's why prices of the so IT companies are also at the lower level. Like they have corrected from the top significantly. That is the reason behind. Yes, in terms of valuation, obviously Infi is trading at like significantly at discounted valuation compared to TCS, and Wipro is also significantly cheaper, or let's say one of the cheapest among the pack at this point of time. So Infi is also in the almost in the same category. I would say these companies are cheapest among the pack. I have no recommendation. You make out your interpretation. for taking any position. But please note, I don't have any recommendation. Whatever I have presented to you, that is the facts only. So this was it from my side, and wish you all of you happy festive season going forward, and happy investment. Thank you.